Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we are joined this evening by the man himself, the Riz, the man whose name's on the side of the building. Riz, how you doing this evening?
Doing well, sir. Thanks for having me on.
Oh, it's always a pleasure to have you here. It's always a pleasure. And I know that everybody in Elite really appreciates your insights, and I'm going to try and dig some of those insights out of you tonight. So I think that if you made it here for the live webinar, you're definitely in for a treat. And if you can't make the live webinar, make sure you watch the recording. But let's go ahead and take a look at the market here, the S&P 500. So it's been 2 weeks since we've had webinars, since we took last week off because it was a short, or rather it was a long weekend. And Riz graciously gave me the weekend off, so I appreciate that. Thank you. And, market has definitely been active lately. We had this really solid bounce off of the 50 moving average that we have here, indicated by the light blue line. And it's just been kind of grinding up, and then it kind of came back down a little bit. It was looking weak, and then Friday finished pretty strong. Riz, I want to talk about something that you discussed in Elite earlier, and you were talking about taking profits earlier, because I know, earlier in this week, I believe it was on Thursday, you closed a couple positions that we've been holding for a little while. What's your take on taking profits early in this market right now?
Yeah, so, as we saw, we kind of got close to all-time highs. I believe that was on Tuesday, but then we had a kind of a red day, following that. So the most recent Tuesday, we opened a bit not too ideal, right? So in that case, I felt, let's see how this week goes. Again, it was a shorter trading week, 4-day trading week. And so I felt, let's see how things go. And the moment, I saw those kind of candles for Wednesday and Thursday, look at that doji. If you really, care about candlestick patterns, that doji there on Thursday, as Chris kind of zooms in, was pretty evident of some uncertainty there. Again, obviously I can't tell the future, so I didn't know that Friday was going to be a bit of a bullish day. But based on that, I had some profitable positions, along with some of us in Elite members. So I felt, let's go ahead and take some profit. We can always enter in again. We had been keeping those trades open for at least a week or two, and I felt we gave it a good enough time. They're performing well, and you know what? You can't go wrong with profits, especially after we've given it a fair shot. So I felt it's great, and that's what we did. And Friday looks to be a very bullish day, solid day, as we are very, very close to that all-time highs area. And I think this week heading in, I think it's good. We had the jobs numbers reports also. I think it was on Thursday. So you know what? I think it's looking good. We just have to, see if we can push past that 42, 40 area, and at that point, I think the market continue to churn higher.
Yeah, absolutely. We are right there. That line is about as close as I can get it right now to the all-time high without actually digging in there and putting the exact number in. But yeah, it's 42.3804 is the current all-time high on the S&P 500, and we closed at 42.2988. So only 10 points off. That's pretty darn close.
Yeah, we're just there. 10 points out of an index. It's about 42.30. That's next to nothing, right, as a percentage. So we're very, very close. I pretty much can say we're right at all-time highs, but breaking past it is important. We've seen markets touch all-time highs before and then kind of pull back. You can see that happened in the beginning of May, right, with that red candle. Just kind of breaking down at May. I think it was May. Yep, 10th there. Yep, that red candle hitting all-time highs and then puking the day after that, and now we're trying to retread that. So it's not uncommon for us to hit all-time highs and for that to be a potential resistance level. This is why I say we're not completely in the clear. We need to see if we can break past that and we can stay above the all-time high level. Once that's happened, it will then become support. Right. So a pretty big week this week, and it's, of course, a full trading week. And I'm expecting quite a bit of action.
Yeah, it should be very interesting to see how things shake out, especially as we get closer to that all-time high. We should see a lot of buying and selling going on at that point. All right, let's go ahead and take a look here. Quick look at the breakdown for the S&P 500. Energy continues to just churn and continue to rally, pushing higher and higher. Financials and real estate are on its heels at this point, both of them up double digits on the year. The S&P 500 itself is up almost 14.6% so far, and all of the indices are above the zero line right now, which is always good. But tech, healthcare, and utilities are currently lagging behind the S&P 500. Really big push here in real estate over the last couple of days. Honestly, a big push in everything. Is that just kind of that rebound as we see, coming off that bounce off the 50? Or Riz, do you see something else going on here?
Yeah, no, this is a normal continuation. We're in the summer months for North America coming in. We ultimately, usually volume is a bit lower. It's a little bit more of a slower time in the grand scheme of things in markets, but I'm not surprised it's continuing. Our bond yields and all that kind of stuff is holding steady. We don't have any major negative catalysts. The U.S. seems to pretty much be almost, I think, from what I can tell, back to normal. Pre-pandemic, we're seeing industries like travel, airlines. I think the TSA clocked like the highest number of daily check-ins and pass-throughs through their checkpoints. I think since the pandemic, right? So that's a great little tidbit there for you that airline travel is coming in. And before you go out and go buy airline stocks, just know that, for the most part, it's generally well known that airlines and travel has been coming back. So it's not some secret knowledge or something that's enough for you to just go out and buy airlines like Delta or whatever just blindly. But it is something that is occurring finally, thankfully, right? So we're looking good. I mean, I find that usually, barring any unforeseen circumstances, markets can continue to chug along, and that's a good thing for those of us that are on the right side of the market, right? For anyone who's been waiting for a crash, again, tough luck. This is why I find there's more people that have missed out on potential to make tremendous amount of money just because they didn't have the right guidance, the right training, the right leadership, and the right insights. And it's a shame. It's a shame because they missed out on a bunch of opportunities. I have people from last March, April, waiting for a crash after that initial one. So it's ridiculous. I can't save everyone. I can't help everyone. It's up to them. I don't provide investment advice. I don't provide anything that, tells people what to buy, what to sell. This is merely me giving my potential personal thoughts, and people are free to do what they do. Right? If they're waiting for a dip, they're waiting for some kind of crash, so be it. But we have done well to kind of do well with giving it our best shot to go with the ebbs and flows of the market and not being in any way, shape, or form biased either on the bullish side or the bearish side, right? I think that's all bogus, like, being a perma bull or perma bear. So I do my best to get the direction right. Again, I'm not always right. I'm not perfect. But so far, since last year, we've done a fantastic job of being abreast of what's going on and when that sentiment is changing, either, to neutral or bearish or bullish.
Yeah, definitely, guys. If you're waiting for the crash, you kind of missed it, because here it was. Here's the Corona crash. There was your crash, guys. That was it, and it's been up and away ever since then. I mean, look at that move. It's crazy.
Yeah. And if you really zoom out, Chris, even if you go on a weekly chart, people need to realize that crash was a great opportunity in the grand scheme of things. Look at how markets have been, since 2009, 2010. Like, people keep looking at it in a very polarized view. Either everything's a crash or everything's a bubble. That's not always how markets work. If they missed one of the greatest opportunities, and I said it, last March, one of the greatest opportunities to enter the market. Take a look at that. One of I think the fastest decline in the S&P 500 index ever. And boy, I could feel it, when we're going through it. In hindsight, it looked steep, but it looks bearable. But during it, it was rough. But
Oh yeah.
once the dust had settled, once we had found some stability, I said, you know what, this is a great chance. We're not going to be able to get the bottom, but we can sure as hell, try and get the meat of the move. And here we are. And markets, as you can see on the weekly chart, just been up and away. And then look at the slope on that. Look at the slope on that since, October 2020. It's been tremendous, right? And all the doomsday sayers, everyone that was just waiting for one catalyst after another. Well, guess what? The market always has a wall of worry, and it usually always, climbs that wall of worry. What bigger worry, have we had to contend with in the last, 10, 12 years after the financial crisis? That was the pandemic, and we have scaled that significantly. And that tells me that, the markets, the U.S., the economy, the American people, capitalism, it's unforgiving and it's unwilling to give up, and you cannot fight that. You cannot fight that. And I'm not here to say everything is perfect, but I'm just saying that never bet against the capital markets. Never bet against American or North American or global willingness for the world to progress and do better and be better.
Well, there you go. I mean, I couldn't say it much better myself. And Riz isn't even American, which is spectacular. Let's go and take a look here at the asset classes real quick. And, Riz kind of hinted at the, the summer push here, and oil has been really rallying pretty solid here, bouncing, right around this $61, $62 a barrel, and closing on Friday looks like just below $70 a barrel. Riz, do you think we're going to see 100 anytime soon on oil?
No, not anytime soon. That's a good question. Not anytime soon. I don't think, anytime in the next year or two. I just don't see, OPEC allowing that. I just don't see all the major, supply and demand situation, the uptick in oil use. But I just don't see that happening. I know we're consuming more oil now since the pandemic started. We have more travel, more commuting. I don't think even the commuting is going to come back as it was before. Obviously, the big elephant in the room is electrification and renewable resources and all that. That's of course there. Of course, I think there's no denying that is the future. I do feel like oil will be there, but the days of $120 a barrel for WTI crude, $120, $110, $100 even, I think those days may be over, and that's not a bad thing because that was too much, right? Remember, when we see oil prices go up, crude oil is one of those things that track inflation, and if we see that go up, that also causes inflation. So we don't want oil price per barrel to go insanely crazy. It's not good for the economy. It's not good for the average consumer, whether it's U.S., North American, European, whatever. It's not good for the average consumer if oil prices are too high. That's not a good thing. And OPEC has realized that, too low or too high, neither is good. The equilibrium, that E word I've been using religiously for the last, few months, it seems, has played through. And I said 60 to 70 is that sweet spot. In fact, 2 weeks ago on our last webinar, I think I said, I wouldn't be surprised if we stay around 65 to 70. We are now at 70. Where we go next is going to be crucial because it's a pretty nice, I would say, bullish move as Chris highlighted in the last couple of weeks. Does this mean, we can go to 75, 80? Perhaps, but I'm expecting some catalyst to come in, with OPEC, because OPEC's not going to sit around and say, we're going to pump the same amount. And you know what? No, they want to take advantage. They want to pump more, but that's going to increase the supply. So where we settle in is going to, make, who knows where that's going to be. I don't think it's going to be $50. I also don't think it's going to be, 100. So where we settle in during this summertime, I think, maybe 70 is a good area. If I have to move my benchmark or my kind of, I would say, top level theory, I would say it's probably around 70, 75. Okay. Again, I think OPEC's probably going to turn the taps on a bit as we head into the summer, so long as demand keeps up. And demand has been pretty good. I don't think it's been the best. Otherwise, we would have seen oil pick up a lot quicker instead of the consolidation we saw in the 60 area for the last few months. But hey, we are getting into that travel time. Historically, summer months, in North America is when a lot of travel is done. A lot of commuting is done, all that kind of stuff. So we are in that time where demand picks up. So let's keep an eye on this, and let's see if OPEC does indeed react.
That'll definitely be interesting to see how that goes. And let's talk about gold here, the shiny stuff that you can't get in a barrel. So we had been pushing up really hard lately, mostly on, from what I understand, inflation news and concern of that. And we had a really big red day on Thursday, and then quite a nice rebound on Friday. Riz, was there some catalyst, or was this just more of a correction?
So you know what? I wouldn't even call it a correction. It's natural. I know a few people actually asked me about gold, and I don't know if I mentioned or not, but a couple of weeks back we had a gold, position by options for a long-term hedge, which we closed because we had such a nice rally after we opened it, and it did way better than I expected in this short amount of time. So I took that hedge, which essentially turned out to be more than a hedge. It turned out to be pretty lucrative. So we took that off. And this kind of drop that we had on Thursday isn't surprising. What is surprising is that immediate pick back up on Friday. Right. So right now I'm kind of staying away from gold. I haven't touched it since we closed that call options on bar gold, to be specific. That's the position I had. I'm keeping an eye on it. I don't really feel like I want to enter anytime unless we get closer to the 1800 level. Maybe we do, maybe we never do. I'm okay with just being on the sidelines and not trying to trade it for the hell of it, or trying to get in because of every individual candle looks like something that really may not be. It may just be supply and demand. It just might be price action.
There you go, guys. All right, I want to talk about Bitcoin here real quick, and then we will talk about Riz's 3 trade ideas for the week. Let me just zoom this chart out real quick so we can get a better view here of the old cryptocurrency. Let's do Coinbase. I always like Coinbase. All right, so everybody said that crypto was going to go to the moon, and a bit of a rollover here, and looks like we are consolidating underneath the 200 moving average. Wow, what a move. Is this all just because of Elon Musk talking about it, or is there more to this, Riz, or is it just this volatile?
So you know what, you touched on it pretty nicely in terms of the individuals or what's going on. So first of all, Elon Musk, yes, he's part of do it. I mean, for better or worse, I think it's sad, but how one individual can impact pretty much an entire asset class. And I look at Bitcoin and other major cryptocurrencies as one asset class. I know someone will say, but Bitcoin is its own thing, and it is. But I'm talking all of crypto. Essentially, what happens to Bitcoin, we can see happens to Ethereum, happens to all these other different coins, right? So I feel like, yes, it sucks. It sucks that one individual can have that kind of impact. It is what it is. But you can see, as Chris has brought up Ethereum as well, they've all pretty much dropped from the highs. Why? Because Bitcoin dropped. Whether you're talking about Doge or Litecoin or whatever you're talking about, they've all dropped. So this is what I'm talking about, where when I say all of crypto, as far as him being the only person or only entity responsible for it, no. I mean, he can move it. He can have, move that pendulum in terms of the sentiment. But of course, he's not the only one. It all comes down to supply and demand. It all comes down to broader sentiment. And Elon is part of that, but he's not the end all be all, right? I just feel like it's not too surprising after the tremendous rally that Bitcoin had this year and even last year to have this kind of pullback. It's pretty wild. I put a tweet out there and I even posted on social media. I said, I think this was maybe 2 or 3 weeks ago, before we kind of ended up below this $42,000 mark. I think we were probably around 45,000 or so. It was probably sometime in the beginning, first week or two of May. I said, crypto is eerily reminding me of the 2017 crypto market. Loosely paraphrasing, that's what I said. And I mean, it just seemed to be coincidental, but man, crypto puked after that, and we dropped below 40,000. 40,000 is a new resistance area. I would not be surprised if we saw closer to 30,000. That's what it's looking like for now. Crypto obviously trades 24/7. It's moving right now, so it's around 35. 35.6. Let's just say, I think we may see potentially 32,000 and then 30,000 next. Again, that's my humble opinion. That's my views. Again, it's not me saying. I always have to clarify, because there's so many people that will get so defensive, and I get so many angry and sometimes hateful messages, depending on if I don't word it correctly in what I say about crypto. So I make it very clear I'm not against crypto, or I'm not rooting for it to collapse or anything like that. But I'm also not a blind loyalist, right? I don't owe my loyalty to any company or stock or crypto or any asset class. So it's important to remain objective. And my objective opinion is maybe we see 30,000, 32,000. You know what? I don't have a position in any individual direct crypto besides, I would say the Big Clout project, which is going fantastic, really. Again, I'm not going to get into that, but really, I find that I'm okay being on the sidelines. A lot of people are like, Riz, getting crypto, and they were telling me it's fraud. People are like, Riz, getting crypto is going to 100,000, and they were telling me this when BTC Bitcoin was around 55, 60,000. So those people went really quiet really quickly, and I haven't heard from those people. So it's funny how many times people give me advice. After people forget I've traded crypto significantly, and 2017, it's been a few years. Obviously, I'm not one of those people that got in crypto early 2000s or 2014 or 2013 or anything like that. But I was in crypto. I did trade crypto heavily. It was something I'm familiar with crypto. I just don't have a position. And when I say I don't have a position, or I haven't had a position in BTC or anything like that for the last 2.5 years, people get offended as if I'm somehow discrediting it or not. I'm not, but I just, for transparency and clarity, I just say if I have a position or not. And if someone bought at 60,000, I mean, it sucks, but hey, that's up to them. Maybe it's for long term. But if someone wants to buy now, I can't fault them either, right? So I always say the axiom is very true, and that is only risk what you're willing to lose. It's just so much easier when you look at the money that you're putting in as something that you may never get back. If you can digest that, truly digest that, then anything you make feels like a bonus. And whatever you lose, and maybe maybe just bag hold it, whatever, it doesn't hurt as much. So you have to go in with the right mentality. And maybe some people do. Maybe some people feel like this is their ticket to Lambos. And I just think that's the wrong way to go about it. Might happen, might not, but I just feel like it's a bad way to go about it, especially with all the over leveraging. And that's what we saw. I mentioned it briefly, I think a couple of weeks back, either on this webinar or somewhere else. I remember saying, the major drop we saw from mid-May to now, over that 2-week period, is predominantly because of leveraged, BTC, people holding Bitcoin on margin. Obviously, that can be pretty suicidal if it flips. And when you're on margin and things drop big, guess what? You get forced liquidated, because the exchanges or brokers need to, protect their downside. So they force liquidate you, and it's a vicious cycle. You get forced liquidated, so you have to sell. It gets sold. Someone else has to get forced liquidated because it's sold, and it goes further and further. And that's where we saw crypto really get so close to like 30,000 a coin briefly, right? Maybe just for a day, but it did get there. And that seems to be the kind of support for now. And I think that's a very strong support. Maybe if we can get there, who knows? Maybe I throw my hat in the ring.
That's fair. That's fair. All right, well, let's talk about your trade ideas, Riz. What have you got on your radar this week?
Yeah, so this week I brought three suggestions to the table, and for me, first one is ABT, Abbott Laboratories. This tanked on some, I believe it was some negative news catalyst for the drug, um, and I believe it's kind of found a floor around 105. As you can see, it was a previous support level, consolidation support level, end of December of 2020, and it's moved up from there. So on Wednesday, Thursday, and Friday seems kind of an indecisive doji candle, as you can see, long tails up and down, but very limited open and close bodies there, right? So that's a bit indecision, but I think this, first of all, Abbott Labs is a great company, solid fundamentals. It's a large pharmaceutical, company. I guess you can put it in the pharma sector, healthcare sector if you want. And I think, the fact that it's found a floor is great. Seeing how markets do on Monday might be a good setup, maybe to run it up to, 113, 114. Again, not a huge mover, largely volatile stock, but I think that's a pretty good entry, on Monday if it can hold this level, and then maybe we can ride it up to 116 next, right? I'm more of a conservative type of trade. This is a stock that, it's not a problem to hold, even if it goes below 105, but that's the individual person to decide. The next one I have for us is obviously one that no one's going to be surprised about, is Netflix. Now, obviously, we've all heard of this. Why Netflix? This is important to understand the harmonics, or what I call the way Netflix moves. Take a look at the up and down gyrations that it does. It's reminiscent to me of how Tesla used to move back in 2018, 2019. I'm kind of showing my age here, but this is how, I have this propensity to be able to see these things and, draw conclusions on the fly. And to me, the 470, 480 level is very strong. It's great. It's been a multiple support level ranging back to nearly a year, right? So not a bad candidate for a long entry if you can be patient, see how it goes. I think if we can hold, this 490, 495 area on Monday, and might be right for an entry running it to 520, 525, right? So that's the second one. Again, these are just technicals. I'm not going into the hardcore fundamentals, and this is for swing trading, obviously, right? Apple is the last one. Good old Apple, the benchmark, the leader, right? Look at that hugging of the 200-day moving average that Chris has in that white line. Wow, right? So pretty amazing, right? This is why I like moving averages, especially the major ones, like the 250, and it's really been sitting there and looks really nice. I don't have a position yet, of course, but I am keeping an eye on this one as well, simply because it had a really good bullish day on Friday. Of course, the whole market did, but the fact that it's able to hold this, even on days like, Wednesday and Thursday, seems good. So if, can not rally too much on Monday, I might be getting in and try and see if I can run it up to around 130 or higher, right? Again, another company that I have no problems holding for months and months and months, even if it dips below and goes against me. This is the power of trading and getting into stocks for swing trading and giving it a wide berth, meaning giving it time, not getting stopped out, having the liquidity, having the capital, having the risk management there, because there's a reason why I have 85% win rate. And people in Elite know that on my trades, based on when I enter and exit, because of full transparency, I tell people when I trade, when I get in, when I get out. What they do is up to them. But based on that, timestamps, proof, 85% win rate. And that's since the beginning of the year, right? So far, year to date, 85% win rate. I mean, to me, I'm doing, I'm happy, right? I think that's significant, to be honest. One of the best kind of metrics over the, that I've had. Usually I do around 65, 75 area. But you know what? 85, I'll take it for now. So there's a reason why, there's an edge, and why I have an edge the way I trade. It's obviously up to the individuals, but Apple is one of these kind of companies where my edge really shows, where I don't get stopped out because I'm not trading like some upside down bat pattern. I'm not trading some garbage biotech. I'm not trading some penny stock. I'm not trading some hype YOLO garbage trying to, turn my $5,000 into like $50,000 and that's it. No, I'm using a methodical approach and on these large caps and going about it in a sensible way. I find that is the best way to do things.
That's Riz's upside down bat pattern, by the way, just so you know. There's the eyes, there's the teeth. So yeah, just so everybody know that.
Genius, fantastic, great,
great
drawing, Chris. I mean, that deserves to be on Wall Street Bets.
That's the thumbnail for the video right there, guys. We nailed it.
That's perfect.
All right, let's stop the recording. All right, we can shut it up. Nope, just kidding. Guys, now if you have some questions for Riz and myself, now is the time. For everyone who is here live, please type it in the chat. Let us know what you want us to take a look at here. We'll go probably about 15 minutes. How do you feel if Corsair will bounce back? That's a good question.
Yes, great question. Corsair is when we entered. Tori, good question. I obviously have a position. Entered it, I think on Friday, if I'm not mistaken. I don't have it right in front of me, but sorry, I entered it on Thursday, and then Friday had a bad day, 6% down or something. And I looked into it, and from what I found, it was just some insider selling. I think that spooked it, but guess what? I think this 30-31 area is a good consolidation zone. I think it can hold it. And I think it can bounce back. We just need to kind of let the market figure out that, well, an insider sold, it's not the end of the world. This stock is, in kind of, I believe, the right sector, gaming, obviously gaming peripherals, and whatnot. So you know what? I'm giving it a shot, giving it time. Only one day open is not enough. So I think by this week, mid this week or end of this week, if it can hold, I'll carry. If it looks really, really bad, like if it's mission critical, like, this thing drops below 30 and is now 28, then obviously I'm not going to bag hold this. It's a recent IPO from 2020. I'm not going to just hang on for deal life, right? I'm gonna cut it for a loss, but I don't really see that happening. So I'm giving it more time, but it can get back.
So if you guys haven't figured it out, I'm actually holding this myself. So that's why I have all the lovely drawings on there. So you'll see that when I'm holding something, I've got my chart nice and marked up for you guys.
As a follow-up, Tori also asked quickly, I think it's pertinent, so might as well address just now too. He's saying, adjusting the stop loss from 3150, we do have a theoretical, a mental stop per se. Yeah, for me, I don't have hard stop losses. I put that stop loss area as a guideline. Again, not telling people what to do, but I feel that's a good area we want to kind of keep an eye on. By no means am I like, if it hits 3149, I'm getting out. No, it's a guideline, it's an area. I'm more so concerned with the 30 area. I'm willing to give it more room. Let's just say that I did not expect that 6% drop. No one did, especially on a bullish day. I think it's just that insider selling catalyst that just kind of caught people off guard. But that's fine.
All right, Matthew says, I know you don't really, keep your blunts rolled and keep tabs on marijuana stocks, but how do you feel about Tilray?
Right, Tilray, good old Tilray. So you know what? The technical pattern looks good. Obviously, it's in a growing sector. It's already had some consolidation. I think they buy. Did they buy? Who they buy? I think they acquired someone. You're right. I don't follow marijuana companies too closely, Matthew, but I think they acquired someone, right? But I think this technical pattern is looking good. Afria, that's the one. I was gonna say ACV, Aurora, but no, it's Afria. You're right. So so far, I think, keep an eye on this one, especially when it comes to that 50-day moving average. It's broken above that. All the technical signs point to, a good continuation. Personally, I don't know if I'm gonna, hold, get a position. Sorry. But I think if it's something you're keeping an eye on and you feel good about, definitely the technicals definitely looks decent in my view. Again, the fundamentals are tricky with these kind of companies because none of them make money, and they're just at that point where they're just trying to increase revenues, make it more scalable, and bring down their costs. But they are in the right sector. So let's see if that momentum can keep up.
And guys, of course, make sure you note the rolled blunt pattern here. This is something we do make sure to keep an eye on, especially when we're talking about marijuana stocks. It's right there next to our upside down bat pattern. So, just keep an eye on that, guys. Okay, Aaron has a question. Second month of less than stellar jobs reports, global tax agreed upon, and inflation is transitory. Are we in a consolidation period in the markets? Still within my beautiful channel that I've drawn, and that is definitely good. Well, let's go back to the market and take a look. So,
right.
do you think with the jobs numbers, do you think that's something that we need to be worried about?
Yeah, so great, solid question, very well worded, and you know what? So very thorough question. So jobs report, not, I would say, the greatest, but still good, So this is one of those things like maybe it fell a little bit short, but guess what? It's still a good result. The economy is coming back, has continued to come back strong, as we've seen. One month's job report, not too worried so far. As far as that G7 tax minimum tax rate that you're talking about, that just literally occurred today, that agreement, obviously it's an agreement, and obviously it's not set in stone yet. None of the paperwork has been gone through, but ultimately, yes, the G7 companies, the largest developing countries, sorry, I should say not companies, countries, is essentially saying that, you know what, we want to tax these corporations and these multinational corporations at a minimum rate amongst all of us, because they want to tax these companies that are domiciled elsewhere, meaning they could have their operations and registration set up in the Cayman Islands or Delaware or somewhere that's more tax efficient, but majority of their sales are done outside that. So what they're saying is, you know what, we want these companies to be on the hook for taxes that we feel or they feel is owed, because if most of their business is done and many of the sales are done in Europe, pay taxes in Europe. If a lot of the sales are done in elsewhere, pay taxes there, regardless of where a company is domiciled and registered. So again, I'm not too worried about that. We've been here before. We've seen, markets pull back a bit because we've seen, tax hike, from the Biden administration. Look at where we are, nearing all-time highs. So as I mentioned at the beginning, a wall of worries is what the market always goes through, whether you're in, the 2020s, whether you're in the 1920s, it doesn't matter. It's always walls of worries. Eventually, if you give it enough time, you manage your risk, you be patient, the market does climb past the wall of worries. So as for your last question or point about inflation, inflation is something we're keeping an eye on. The Fed is insistent that it is transitory. Obviously, the real world example of inflation that people like you, me, someone else sees it in front of us as clear as daylight. Grocery prices have gone up. Whether we're eating out, whether we're buying homes, whether we're, paying for gas, or whether we are really doing almost anything, acquiring any services, getting our home renovated or buying a car, prices have gone up, right? So the individual, no matter who they are, should be seeing that inflation and are seeing it. Whereas what the Fed and the Federal Reserve, I should say, is what they're looking at is a broader view and a much more top-down approach. Whereas us, the individuals on the ground, who are going out there and getting groceries, and we're like, what the fuck? This, 2 or 3 years ago, this tomato, did not cost this much, or I'm going to eat at the same restaurant I used to eat 3 years ago. I'm going out, and now their prices are up 50% than where they were. And this is not just this restaurant. If I go to the next restaurant beside it, or the another restaurant that's in another neighborhood, even another city, if everyone is going through similar, inflation is there in front of them, but it doesn't necessarily mean that it's there in a macro sense for the entirety of the U.S. And that is what the Fed looks at, right? One thing we've noticed, take a look at this, like no disrespect to the smaller states or whatnot, but California, if everything's gotten more expensive in California, but on the flip side, if things have been remained the same in Oregon or in Nebraska or in Montana, if things have gotten tremendously expensive in LA, but on the flip side, you have that, where things have stayed stable, what's happening? When the Fed is looking at it from a top down, they're using all these cities, all the states of the country, and they're essentially averaging it in a way. That's what's going to skew it, right? But if for someone in LA, there's no doubt, holy crap, housing prices have gone through the roof, whether you're renting or buying, forget about it. It's crazy, living costs, commuting, everything. If someone's in New York City, someone's in Chicago, and someone's in Boston, it's not a secret that inflation is there. We've seen prices go up for the things that we all buy and use and consume. But the reality on a broader level could be different for someone in Missouri. It could be somewhat different for someone in Oregon. It could be different for someone in any different state or city that isn't a major hub or very concentrated or very populated. So that's what I mean, and I'm trying to refer to in the word transitory. People are, we don't know. No, we're in unprecedented territory when it comes to inflation and rates. We've never had, such low rates for so long, broadly speaking. We've never had a pandemic that the economy or the globe has gone through in the last 100 years. We've never had so much, printing of money. We've never had so much handing out of money, not just to corporations, but to the average person, right? I'm not going to get into whether that's good or bad, but it's a fact. And we've never been in this situation. This is modern monetary theory, MMT at its finest. And if anyone tells you that they know what's going to happen, or this is what's going to happen, and this is, what this is pointing to, is bullshitting you, because we've never been here. We've never, ever been in a situation quite like this. So who knows? All we can do is try and adapt, keep an eye on things, right? And lastly, Aaron, again, I know I'm still going on with your question, and the last point you mentioned it, are we going to be in a consolidation period for the markets? No, I think just like all things, whether it's bond yields, whether it's inflation, whether it's corporate tax, whether it's whatever, I think the market will see things through, because GDP numbers are good, job numbers are good, economy is rolling along, there's infrastructure coming, inflation is potentially there on the street level, but the Fed's kind of just wagging their tail about it and putting their fingers in their ears and blindfold on and saying, well, maybe it's transitory, it doesn't exist yet. So that remains to be seen. I think the market can continue higher in the near term. If we see inflation uptick, if we see the Fed admitting that yes, potentially we're seeing inflation burning hot, then the market can pull back. Market doesn't like inflation going up in the near term. In the long run, it's a blip. Okay. So it's, again, very important to keep things in perspective. I think overall, the market can continue to churn higher. Okay.
Another great question here. PHYS is a pure gold stock trading at negative 0.58% premium to its net asset value. How would you analyze info like net asset value premiums when considering a trade like this? Well, let's take a look at the chart.
All right. Yes, Sprott. So Sprott is one of those. In fact, it's funny you mentioned this. Wow. It seems like Aaron, you and I are sort of in sync, because I saw that Sprott recently has started showing pictures. Again, I can't verify if they're legit or not, but apparently they've been showing pictures of their reserves for the actual gold or silver that they hold. Right. Usually these ETFs that track or hold gold or silver, they say or they claim based on independent audits that, okay, we have this much gold, this much silver. But Sprott has gone ahead and said, look, this is how much we have. And here's a picture of it. So very neat, very different to what other ETFs do, whatever they're tracking, whether it's gold or silver or any metal or any commodity, right? So I am aware of that. It's just funny you mentioned that because I literally saw that picture yesterday. But in terms of trading at a 0.57% premium, negative premium, so it's trading at a 0.5% to net asset value. This is actually completely normal. If it was trading in a 5% or even a 3% negative to net asset value, then that's a steal. Why? Because that means they have, and if they have an XYZ amount of assets on hand, and you have a 5% markdown on that, that's a good buy. But 0.5%, it's within the norms of that range, right? If it's within a 1% up or down, we've seen the opposite. We've seen it with some of the Bitcoin ETFs, in the last couple of years, where the price, to NAV, net asset value, was massive multiple. So you're essentially paying more than what they hold. For what? I don't know, but it's the opposite of this, right? So we want to stay away from that kind of stuff. But for this, it's not enough for me to say, okay, we are getting such an amazing deal with a 0.58% to a negative, I would say deflationary to their NAV. It's not really a big deal, right? We've seen this happen with many ETFs before.
Great question, by the way. Let's go ahead and close on this question here. Riz, what's your view on the point Ray Dalio saying he prefers Bitcoin over bonds? Do you see money flows from bonds to Bitcoin in the future?
Great question. It's funny you mentioned that. I know I read that with that news piece as well, in a headline that he prefers Bitcoin, which is big news actually. And it's not new news, but it is big news. And Ray Dalio signaling that he's a supporter and a holder. Actually, he actually does hold Bitcoin. Again, I'm going based on what he said. And I find that in regards to bonds, first and foremost, it's not a secret, and I will say clearly, I do not like bonds. I hate bonds. I've never held bonds. I never will hold bonds. I will never hold direct bonds, whether it's via ETF or directly. I will never hold anything like that for long term, because I think it's stupid. This whole asset class balancing model that these banks and mutual funds do of 60-40 split for the average person, 60% equities, 40% bonds. It's a fucking gimmick. It's frankly negligence in my view. So in short, fuck bonds. But as a broader answer, I do agree with Ray Dalio. If someone said, Riz, would you buy bonds or Bitcoin? Forget about it. The answer is so fucking simple and clear to me. Bitcoin, each and every day, because bonds are absolute garbage. Yeah, there's a need for bonds, obviously, and I'm not going to get into the debt structure and why it's important, whether not only for corporate bonds, but for treasuries, because guess what? How is the U.S. printing so much money? They're selling bonds. They're selling treasury bonds to companies and countries, right? China is one of the largest holders of U.S. treasury bonds. Again, this is a whole different topic. Macro is just something that's just phenomenal. I could talk forever on it. But point is, Bitcoin over bonds, absolutely any day, every day. Just have to have the risk tolerance for it. Bonds are absolute trash. I'd rather someone, honestly, you have a better chance of doing something with it. Buy a fucking car or something. I don't care. Just do something else with the money if you don't want to put it in equities, or you don't want to put it in something that can do something with it. Because I, as someone who's been in banking and finance, I can tell you it was painful for me to see clients of the bank, not my clients, but clients of the bank, holding bonds, and they're 55, 60 years old, and those bond portion of the portfolio did nothing. It was disgusting. It disgusted me seeing that these people had their hard-earned money, the money that they put away based on some fucking advisor's view that, put in bonds, put in this balanced portfolio, put it on low-risk portfolio because you're, getting to retirement years. I get that. But that fucking model is broken. Again, I'm very passionate about it. It's been a big gripe of mine. about this. And again, this is not financial advice. I have to say, just my views. And I hate bonds. I think this whole 60-40 or this, increase bonds and have bonds in your portfolio to decrease risk is fucking bogus. That whole model is broken, because everything that worked in our grandparents' time doesn't work anymore.
There you have it, guys. I mean, you don't get it any more straight than that. It's because I want to thank everybody for coming out tonight. It was great having everybody here on the live call. And for all of our members watching who aren't on the live call, get your tails out here. We would love to have you here on the live webinar to participate with us. It's great having you here. You can always get your questions answered. And we would look forward to seeing you. And if you're not a member of Riz Elite, well, the time is come and gone, and Riz closed membership for now. So you're going to have to wait until we open up again. But next time we announce it, you better jump on this.
Absolutely. Absolutely.
All right. Well, everybody have a great rest of your weekend. I appreciate everybody who made it here for the live call, and we will see you all in Discord on Monday.